Greetings to everybody who are watching this lecture. We will start with a step-by-step guide to cash flow statement introduction. Questions such as why financial statements are prepared, the term liquidity means, what does this cash flow statement helps, cash and cash equivalent means, and classification of cash activities will be addressed. What is the purpose of financial statements? Users of financial statements are concerned with profitability of entity. That means whether it is profitability or not, how much profit is and what source of income is contributed, everything which can be known by preparation of profit and loss account. They also want to know financial position of an entity which can be known by preparing balance sheet. But every user, maybe internal or maybe external user, process of decision making like to know not only profitability of the entity, financial position of the entity, but also liquidity position of an entity. Sir, what do you mean by liquidity? The term liquidity means the ability of company or an entity to meet its obligation. If it can meet all its obligation, then we can say that liquidity is very strong. If they are in cash shortage, and we can say there is a problem with regard to liquidity, they may not meet certain obligations. Therefore, liquidity also plays important role in making decision for users of financial statements. Now, what does this cash flow statement helps? For example, if I prepare a balance sheet on the asset side for 2 years, if I say cash in hand as well as cash in bank, both put together in year 2022 5 lakhs, year 2023 40 lakhs. Opening cash balance was 5 lakhs, but closing cash balance was 40 lakhs. The liquidity position, if you see opening cash balance 5 lakhs, closing 40 lakhs, it shows that they have sufficient cash to meet its obligation. Just because having sufficient cash doesn't mean that their liquidity position is strong. One should know from where they got their cash. Do this cash really indicates the strength of an entity, or does it indicates the weakness of an entity? Matters a lot. People normally see the financial statements, that is balance sheet, opening and closing. Just because of that, they cannot conclude on liquidity because it has an amended cash. That doesn't mean they are very strong liquidity. Liquidity wise, we can really comment on whether it is strength or weakness only we can say from where these 35 lakhs generated. So cash flow statement is nothing but a reconciliation between opening and closing cash. In a summarized form, we prepare cash flow statement as per AS3. Sir, what do you mean by cash equivalents? Dear students, cash equivalent is an asset which satisfies two conditions. If it satisfies two conditions, then that asset can be called as cash equivalent. First condition, short term and highly liquidable asset. Now the question arises, sir, short term means less than 12 months? The answer is no. In this standard, short term refers to 3 months. Short term refers to 3 months. Within 3 months, convertible into cash. Highly liquidable. Examples, cash at bank, gold, silver, temporary investments, demand deposits, FD maturity of 3 months. In liquidity point of view, liquidity can explained by cash at bank, gold, silver, temporary investment. These are not in the form of cash but as equivalent of cash. With respect to second condition, on realization into cash, insignificant change in value. That part of highly liquid instruments which can be converted into cash at insignificant risk. Wordings are very important, which can be converted into cash at any given point of time but at insignificant risk. Minor risk is involved. Example, suppose I purchased a short-term investment for 5 lakhs. On sale or on converting of it, I should be getting approximately 1 lakh or very minor insignificant loss of value, not a problem. Dear students, investment in equity shares, can you call it as cash equivalents? Suppose I purchased Kingfisher shares, I can sell whenever I want, very highly liquidable because it is listed in the stock exchange. But today you brought for some value, but you will be able to sell it same value. It's not not possible. It doesn't satisfy the second condition. That is why investment in equity shares or investment in mutual funds cannot be classified as cash equivalents. Investment in government bonds which are due in 3 months from the balance sheet date, those can be called as cash equivalent. For the purpose of cash flow statement, all the cash activities are divided into 3 types. One is cash flow from operating activities. Second one, cash flow from investing activities. Third one, cash flow from financing activities. Now, let us understand what is investing activities and what is financing activities. After that, I will come back to operating activities. Investing activities. The term investing activity means any activity which alters your fixed assets and long-term investments positions either by sales or purchases. In cash flow, we call either it as inflow or we call it as outflow. Examples: purchase of fixed asset. Dear students, whether cash is coming into the business or going out of from the business, cash is going out. So it's an outflow. Sale of fixed asset, inflow. Sale of long-term investments, inflow. Purchase of long-term investment, outflow. Not only purchase and sale. If you purchase a fixed asset or long-term investments, any income earned on that will also fall under investing activity. For example, investment in the form of long-term fixed deposits or debentures in some other companies, the return what I am going to earn in the form of interest will also classified as investing activity. In simple, all cash and bank transactions which are related to fixed assets and long-term investments will fall under investing activity. Financing activity. Any activity which alters your capital structure. Capital structure means combination of various sources of capital employed. Example, owner funds can be in the form of equity share capital or preference share capital. Dear students, issue of shares, whether it's an inflow or an outflow, inflow. Buyback of shares, outflow. Interest or dividend paid is an outflow. Issue of debentures, inflow. Redemption of debentures, outflow. Loan received, inflow. Repayment of loan is an outflow. In simple, all cash and bank transactions which are related with share capital and loans will fall under financing activity. Operating activity. It has 2 definitions which has to be taken care. First one, operating activity refers to principal revenue generating activity as well as incidental to principal revenue earning activity. Principal revenue generating activity means this is the main business for me. For example, we are engaged in rendering of education. Anything relating to rendering of education will fall under operating activity. Hostel fees paid by the students, sale of material or incidental to revenue earning activity. Example, sale of jewelry by a jewelry dealer falls under operating activity. Sale of car by a car manufacturing company will fall under operating activity. Example, advertisement, payment of wages, sales, purchases will fall under operating activity. Second definition, residuary activities means any cash activity, it neither investing nor financing, that is also treated as operating activity. For example, I pay income tax. It is a tax only on operation or only on investing or only on finance or all of them? The answer is all of them. Tax is affected by everything. The income what you get from investment is subject to tax. The interest what you pay on debenture will have effect on tax. The sale what we generated from operation will have an effect on tax. So that's why definition given by AS3 with regards to operating activity, 2 definitions. Any activity relating to your principal revenue generating is called as operating, and any other activity which is not investing, which is not financing, will fall under operating activity. Example, government grants received, insurance received, calamities funds which are not your investing or financing by default fall under operating activity. So we should see every transaction of business and segregate all cash movements, inflow or outflow, under operating activity or under investing activity or under financing activity. In simple, all cash and bank transactions which are related to principal revenue generating and residual activities will fall under operating activity.